Todd Preston's here from D.A. Davidson. We're talking this week's stock market news. Now, after a little bit of a rusty day on Monday, it looks like we had stocks close higher for 3 straight days in a row.
We did, yeah, right. Monday was horrible. We were down over 600 points, lots of panic on concerns that we're going to enter a big trade war with China. The Dow yesterday was up 214, the S&P was up 25, and the NASDAQ was up 75. So a good run for all of them, and a kind of a good way to enter the last day of the week. But futures this morning are showing a weak opening. But again, it's not how you open, it's how you close. So we'll see what happens throughout the day.
And you did mention trade wars. So what is the likelihood that we might enter a trade war?
I think the bottom line is China needs us more than we need them. A tariff would not be good for our economy. But in terms of scope, we exported, 100 billion in tariffs would represent a slight drag on our economy, but it wouldn't be. We're a $559 trillion economy, so their tariffs would represent 0.9% drag on our GDP. Our tariffs would represent almost 5%, so a substantial difference. Bottom line is we have the leverage that they just can't have. If we look to other trading partners and take that business away from China, now their economy is going to struggle for decades. So basically, if we get in a trade war and it causes us, the U.S., to catch pneumonia, or excuse me, a cold, they catch pneumonia. So.
Gotcha.
Trump is expected to bring them back to the table, and we should see some sort of agreement. I don't know that we'll see a trade war, but if we do, I don't think it'll be long-lived.
Just something that has to kind of be worked out.
Yep.
All right. And last but not least, is it true that the economic indicators are pointing to continued improvements?
It is, yeah. We saw first-time jobless claims down again, below expectations. We saw first-time home buildings expanded over 5% for April, and the Federal Reserve basically said that low interest rates are kind of the new normal, and 2% is not a target but a range, and so rates should stay low, and that's good for the borrower, that's good for stimulating the economy. So the economic numbers look good. So again, all things considered, the economy's doing fine. We just got to answer this geopolitical issue.
All right. Well, Todd, thank you so much for being here with us. You have a great weekend, and we'll be back after this break.